The context is that crypto holders aren't paying at least $50 billion per year in taxes that they owe. If someone bought $300 worth of gold or $300 worth of Apple stock, would they be required to report any income they made from those transactions?
Imagine a world where billionaires get tax breaks, while everyday people foot the bill. In this explosive hearing, Senator Elizabeth Warren exposes the shocking truth behind crypto's tax loopholes and the powerful lobbyists trying to get them even richer. Don't miss this. What happens next could change everything.
Thank you, Senator Warren.
Thank you, Mr. Chairman. I'm just going to start by acknowledging how absurd it is that the Senate is convening to discuss anything other than this Republican shutdown and stopping Donald Trump from throwing 15 million people off their health care and more than doubling health insurance premiums for millions of Americans. Now, this hearing is supposedly about clarifying crypto's tax treatment. The context is that crypto holders aren't paying at least $50 billion per year in taxes that they owe. In theory, reform proposals could plug those crypto tax loopholes, which would be a good thing. But the proposals I'm seeing follow a familiar movie script. Industry lobbyists want special tax rules for crypto that will make crypto billionaires richer and give crypto an unfair advantage over other kinds of competing financial products. So I want to run through a few of those. Ms. Kramer, you're an expert on our tax laws, so I've got some very simple questions for you. Let's start with a de minimis exception, a proposal that would allow crypto investors to avoid reporting income from crypto transactions under $300. If someone bought $300 worth of gold or $300 worth of Apple stock, would they be required to report any income they made from those transactions?
Yes, they would.
All right. If crypto investors get this de minimis exception, would they pay less in taxes than traditional stockholders for precisely the same kind of transactions?
They would pay less.
All right. The Joint Committee on Taxation estimates that this proposal alone would be a $5.8 billion tax boost for the crypto investors. So let's do a second one. An accountant who runs his own business, gets paid for updating books and records, just standard stuff. In the crypto world, miners and stakers get paid for updating the blockchain, crypto's financial ledger. The accountant, of course, pays taxes on their income when they receive it. But one crypto industry proposal would allow miners and stakers to delay paying taxes on the crypto they earn as income until they sell it, which could be many years later, if ever. Ms. Kramer, if this provision passed, would the miners and stakers effectively pay less in taxes than accountants, even when they are doing almost exactly the same work?
They would pay less.
So that's right. And the estimate here is it would be to the tune of about $4.3 billion, according to the JCT. So let's do a last one. Professor Nellen, you teach tax law. If a business receives over $10,000 in cash under current law, they have to submit additional reporting to the IRS and to FinCEN, in large part so the government can spot money laundering and criminal tax evasion. I think you were talking about that earlier with Senator Hassan, right?
Right.
Okay. So one proposal the crypto lobbyists have been floating would exempt crypto transactions from that requirement. Would that proposal make it more or less difficult for law enforcement to counter crypto money laundering and tax evasion?
Well, given the purpose of that provision, and it is already part of the law, it was added back in November 2021, but waiting for regs to make that effective, that is the purpose of it, to help identify where there is just a particular use of that. Some differences, though, between cash and crypto is, on a cash transaction, the customer is most likely right in front of you. That would not be the case, but
I understand that crypto has put out its reasons why it wants an exception. All I'm trying to get at each time is the crypto lobbyists are crawling all over Capitol Hill. And what are they looking for? They're looking for special rules for crypto, and not special rules that sometimes make it more expensive to operate crypto and sometimes make it less expensive, not special rules that sometimes makes it easier to track crypto transactions and sometimes makes it more difficult to track crypto transactions. It's that every one of these special rules tilts in the same direction, and that is for anyone investing in crypto to pay less than the equivalents elsewhere in the financial system, and in this case, to make it harder to track what's happening in crypto transactions if they are being used for illegal purposes. Look, I'm all for getting rules that are appropriately tailored, but I think we should abide by the same principle that we have used for decades in Congress, and that is same basic transaction, same kind of risks means we need the same kind of rules. And that should be true for crypto, just like any other financial product. Thank you, Mr. Chairman.
Senator Elizabeth Warren begins by expressing frustration that the Senate is convening to discuss anything other than the ongoing government shutdown and the potentially disastrous impact of former President Trump's healthcare policies, which could result in 15 million people losing their health insurance and a drastic increase in premiums. She argues that this hearing, supposedly focused on clarifying crypto's tax treatment, seems disconnected from the urgent issues facing Americans. The topic of the hearing revolves around the fact that crypto holders are not paying the estimated $50 billion in taxes they owe every year. While there are proposals to close these tax loopholes, Senator Warren is skeptical of the industry's influence on Capitol Hill. She highlights that lobbyists are pushing for special tax rules for crypto that would benefit crypto billionaires and give crypto an unfair advantage over other financial products. One of the proposals being discussed would allow crypto investors to avoid reporting income from transactions under $300. Senator Warren questions whether traditional investors, such as those buying $300 worth of gold or Apple stock, would be able to avoid reporting income. When asked about this, an expert confirms that traditional investors would still be required to report such transactions, while crypto investors would not, leading them to pay less in taxes than their counterparts in traditional financial markets. The Joint Committee on Taxation estimates that this proposal alone would result in a $5.8 billion tax break for crypto investors. Senator Warren then brings up another proposal that would allow crypto miners and stackers to delay paying taxes on their earnings until they sell the crypto, which could be years down the line. In contrast, an accountant would be required to pay taxes on their income as soon as it's received. The expert confirms that this provision would allow crypto miners and stackers to pay less in taxes compared to accountants doing similar work. The tax loss, according to the Joint Committee on Taxation, is estimated at $4.3 billion. The final proposal under discussion is one that would exempt crypto transactions over $10,000 from the current reporting requirement to the IRS, which is designed to help identify money laundering and tax evasion. This rule was added in 2021 and aims to ensure that law enforcement can effectively track large transactions. However, crypto lobbyists have pushed for an exemption, arguing that it would be difficult for crypto transactions to be tracked in the same way cash transactions are. While acknowledging the differences between cash and crypto, the expert warns that exempting crypto could make it more challenging to prevent illegal activities like money laundering. Senator Warren concludes by stressing that the proposals being pushed by crypto lobbyists would consistently favor crypto investors, making it easier for them to avoid taxes and harder for law enforcement to track criminal activity. She calls for the same rules to apply to crypto as they do to other financial products, urging that the same risks and transactions should come with the same regulations, without exceptions.